Harmonic Trading Education, Patterns into Profits, Certified Class Instruction Series, presented by Scott Carney. Introduction to Harmonic Trading. What is harmonic trading? Harmonic trading is a measurement-based approach to define opportunities in the financial markets. These strategies recognize natural harmonic ratio measurement relationships that quantify price movements as harmonic patterns. Now, it's important to remember that these patterns calculate the proportional ratio aspects of each price structure, and that identifies the natural reactive reversal levels of harmonic support and resistance in the financial markets. Harmonic trading respects the natural phenomenon of cyclical movements of growth and decline throughout nature. When related to the financial markets, harmonic trading analyzes these natural price points within the cycles of growth and decline. Now, harmonic patterns form in all markets and all time frames and are pretty universal across the board. Now, most people are aware of the classic price patterns in the financial market. Those can be head and shoulders, cup and handle, wedges, Elliott wave, zigzag. There's numerous. But harmonic patterns in the financial markets consist of the ABCD pattern, the alternate ABCD pattern, the Gartley, the bat, the alternate bat, crab, deep crab, butterfly, shark, and 5-0. But what is a harmonic pattern? Now, these are typically 5-point price structures. We like to think of the primary ones as M and W formations, but these can be precisely measured and define the cyclical turning points, indicating important measured levels of harmonic support and resistance. It's important to note that although these structures may appear similar, each type possesses specific measurements that validate the pattern and the corresponding price level for the opportunity. A unique price structure that possesses the three primary measurements to define what is called the potential reversal zone constitutes a harmonic pattern. Now, this range of price measurements that defines the exact completion point of the pattern is the area for the opportunity. Elements of a harmonic pattern. Now, we look at these harmonic patterns, we're looking for specific structural formations, and we label them, measure them in a specific manner. And we're looking for a primary XA leg, and these are within the M and W type formations. We're looking for an equivalent and minimum ABCD pattern. We're looking for a BC projection, and then we're looking for other larger retracements, extensions that complete in the same areas. Now, it's important to note that these specific measurements that we go through are what make price structures harmonic. So let's look at one. Here we have a bearish butterfly pattern. This is a W structure. Starting right here at the X point, we see that the A is the lowest point in the pattern, followed by a retracement up to B. Now, this must occur at a specific ratio. In this case, for the butterfly, it's at a 7/8-6. This W formation possesses exact ratios at each point where we define and calculate each aspect to define the opportunity, the price level to sell the market. In this example of the Australian dollar versus the Swiss franc on a 60-minute, we have a perfect bearish butterfly. Now we see this W formation starting with a critical high, and we usually want to go with the clearest high and low points. Starting here from X to A, that's our primary leg. This sets up our A to B leg. Now that's the first point of the initial completion of the pattern. This B point, that's at a 7/8-6. That's kind of the identifier. And as we get into the patterns, we look at how the 7/8-6 and how that helps to line up the other points in the structure where we have a C point. Notice it cannot exceed the A point. And finally sets up our minimum A to B, C to D level, where three numbers converge right here to define our natural harmonic resistance. In this case, that's between 97.86 and 97.79. We look at these three measures because that's what makes it harmonic, and then we're looking to sell at the completion of that structure. So what's the big deal? Because harmonic pattern formations, really they're exact measured structures with specific price levels to mark optimal execution opportunities. I think that's critical for any methodology, but with harmonic patterns, it's precise. Harmonic patterns are measured to distinguish the structural signals and define the exact entry levels for the trade. We can employ pattern-specific strategies that optimize the decision-making process. Also, it's important to note all trade considerations, the entry, the exit, the stop loss. These are determined in advance to define the opportunities with the greatest probability for profit. We have this really important consideration with all pattern recognition strategies is the essence of differentiation. Now we're looking at the pattern differentiation of M and W price structures. We need to look at it and think of it from a simple standpoint of, does this M letter, that price formation, is that the same as this type of M formation? Does this W formation, does that look like the same W formation? Both the same letter, but when we're looking at price movements, they're different. And pattern differentiation is the key to define the opportunities with the greatest probability for profit. Now, harmonic trading theory, it combines two schools of thought. We're looking at wave structure, and that comes from R.N. Elliott wave, but also others that preceded him, which is such as Charles Dow, and there's a few lesser technicians that wrote about wave theory, focusing mostly on what Dow did at the turn of the century more than 100 years ago. But Elliott's work is what is most popular. And so most people are aware of the Elliott rules, but most Elliott counts, they lack the exact measurement and the exact definition of what constitutes an opportunity. We can do wave counts and they can be helpful for looking at the framework of any market, but when we're looking for a trading opportunity, we need exact price levels. So that's where W.D. Gann comes in. He defined some unique ratios based on sacred geometry, but my problem with Gann is he spent too much time on astrology, and harmonic trading has nothing to do with astrology. I do not believe that the astrological cycles that they proclaim can have the predictive capability with consistency. Maybe there are preferred times, but astrology does not have any value when we're measuring price segments. But harmonic pattern differentiation is the key because that's the structural price analysis where we analyze the exact market, the proportional ratio measurements of the movements themselves. We categorize these random movements as distinct measured patterns, and these present a defined predictive technical and structural signals. Now, harmonic trading is the collection of the harmonic measurements. Now, this helps us to identify, execute, and manage all trading decisions, but this is in advance, and we'll get into this more when we look at the pattern webinars. But it's an important point here that we measure everything in advance. We define what the situation is before we even pull the trade. Now here's some important references, some historic technicians that inspired me and a lot of the preceding work that came before a lot of the what is currently known now of the harmonic patterns. So if we're going to go back more than 50 years, we're looking at people like Charles Dow and Dow theory. We're looking at R.N. Elliott and Elliott wave principle. Most people know Bob Prechter. Bob Prechter and A.J. Frost were the authors of Elliott wave principle which really was the collection of R.N. Elliott's writings. Now, W.D. Gann, he's probably the most mysterious of all. A lot of claims of how successful of a trader he was. But again, his books focus on astrology and a lot of the squaring techniques that he presents there. But for practical perspective, from a practical perspective and for trading purposes, for defining exact price levels, I find it way too complicated. Richard Wyckoff is one of the old-time, one of the turn of the century, go back to 1900 technicians, wrote some amazing books. He even wrote some stock market books under a pseudonym called Rollo Tape. Really quite a character, and I recommend all of his books. H.M. Gartley wrote the infamous Profits in the Stock Market. Now, in the Gartley webinar, I outline exactly what Gartley did because he did not define the pattern. And then finally, we've got Arthur Merrill, because this is the first guy that really tried to define M and W shaped patterns. Now, he had an associate, Edward Levy, who also wrote some work on M and W type patterns, but they tried to categorize them in this manner, in more of a zigzag formation. Harmonic trading doesn't have a secret sauce, and there's a lot of voodoo, a lot of misrepresentation, I feel, about harmonic trading and harmonic patterns now since it's become popular, but there is no secret sauce here. Harmonic trading patterns, their measurements respect the natural phenomenon of cyclical movements of growth and decline. Again, when we relate that to the market, that's where we can expose these areas of support and resistance within the growth and decline. And it measures the price history to assess the opportunities. So we're looking at the trading history, which is immutable. If our analysis is derived and focuses on the patterns, the repetitions, the opportunities that repeat in the market, that's the purest sense of information that we can apply to define opportunity in the market. Now, when we're looking at harmonic trading, we got to know that what makes a pattern harmonic is a critical step, and because it's a rule-based approach. And that, more than a lot of other methodologies, goes a long way to define what these structural opportunities are all about. The refinement of the M and W patterns, they identify precise opportunities based on the specific ratio alignments. Now that quantifies and pinpoints all the relevant parameters in the determination of the trade. It makes it exact. It defines exact opportunities. Now these patterns calculate the harmonic ratio, proportions, that is the Fibonacci aspects, and we'll talk about that in a minute here. But what we're measuring here are these price structures that manifest the natural reactive reversal points in the financial markets to present us with harmonic structures. Now, as we looked at the harmonic pattern elements, the keys are the defined XA leg in that M and W structure, that ABCD pattern component, and then that BC projection. We look at these measures because this provides the order within the chaos of life and the markets. As we look at the ratios in the ratio webinar and get into some of the harmonic pattern webinars, we're going to see how this methodology seeks to identify cycles of trading that are manifested as quantifiable price patterns. This phenomenon is similar to examples of patterns in nature and cycles of life continually repeat. So who is Fibonacci? Because this is important. We're looking at all of this harmonic nature, but who defined it is Fibonacci in his Libera Bacci. Now, he's an Italian mathematician, but he was responsible for many important discoveries, but most important were the methods of mathematical computation, accounting, and commerce. That's what his work featured. But his book translated and popularized the Hindu Arabic, or simply Arabic, arithmetic numeric system of the time for use in record keeping, and cited their many advantages over Roman numerals, which was the principal method in Europe throughout this time. Also, he noted that addition, subtraction, multiplication, and division could all be performed much more easily than the numeral system. In the book, he proposed this Fibonacci sequence. And his Fibonacci numbers and what he was proposing was just a simple mathematical theorem about rabbits. And the rabbits are really just a metaphor for any growth cycle that could continually grow after a certain number of months. And he came up with the following equation of saying, okay, if we have a newborn pair of rabbits, requires 1 month to mature, reproduce at the end of the second month, and every month thereafter, how many pairs will we have at the end of n number of months? The answer is u to the n. That is, u to the n plus 1 equals u to n plus u times n minus 1. Sounds like a lot of mathematical gibberish, but it's actually pretty significant because what it is it's a numeric series. And the Fibonacci numeric series is what he was talking about, is this natural ability, growth sequences that starting with 0 and 1, adding those two numbers, that begins the series. Now, continuing this calculation, the sum of these two numbers is added to the second number, and the sequence requires a minimum of 8 calculations. So we get the following numbers: 0, 1, 1, 2, 1, 2 is 3, 2 and 3 is 5, 3 and 5 is 8, 8 and 13 is 21, 13, 21 is 34, so on. But here's what we get. Here's the unique natural phenomenon regarding this growth sequence. After 8 calculations, the numeric series yields a 61.8% or a 161.8% proportion. So we see that in the 8th iteration, 34 plus 55 is 89. 34 divided by 55 is an approximation of 0.618. The inverse, 1.6176, approximately 1.618. Same with the 9th iteration. The key here, okay, is there is a proportional relation in the growth cycle. And the further you go in this series, the closer these ratios come to the exact number of the 0.618 and the 1.618. Now we see these patterns in life where any phenomenon, same phenomenon that can be quantified and measured, manifesting what I call a chartable frequency, which can be plotted, will typically possess structural patterns with these Fibonacci-related ratios to define critical extreme constraints and patterns within the movements in general. We can look at cardiograms, radio waves, or any other measurable activity over a per time unit. Now this is a cardiogram. It's might not look like a lot, but if you don't know exactly what the patterns are or what to look for in terms of the patterns, you're not going to recognize it. But you'll learn that in the webinars of what to look for exactly. But these are patterns that are materializing on a natural basis. Here is a decibel chart. This is attenuation, the gradual loss of the sound wave intensity through time. But this too possesses harmonic patterns and harmonic relationships. Now going back a couple years to the Super Bowl, here's a chart of tweets per second. Now where are the patterns here? I mean, impossible, right? How could I know where important turning points of tweets per second in a Super Bowl may occur? Well, there's one. A bullish bat pattern where remarkably at the 88.6% ratio, that is the lowest point of the bat pattern, we experienced a surge up and where a touchdown was the result. On a larger scale, here's a bearish Gartley, where the initial surge of tweets per second was followed up over the course of an entire hour of a nice ABCD structure with a Gartley structure that marked the secondary high of tweets per second. When we look at Fibonacci relationships in the natural world, we can look at a variety of natural phenomena, that possess some type of measurable cyclical frequency that produce distinct patterns of growth and decline. And this can happen in plants, animals, the human body, or even astronomic phenomenon. One of the clearest examples is this Fibonacci phyllotaxis. The phenomenon of Fibonacci phyllotaxis is the study of discernible growth patterns in plants. A survey of 650 species of plants containing 12,500 specimens that displayed spiral or multiple phyllotaxis patterns, estimated about 92% of them exhibited Fibonacci-related traits. So that could be roses, cactus, all of those type of plants. In the human body as well, we have many golden proportions. And Leonardo da Vinci was probably the most notable proponent of describing and illustrating these proportions in many of his works and drawings of the various 5 proportions, from everything from the entire body to the entire hand. Incredibly enough, DNA molecules possess the same numbers as the 7th and 8th sequence of the Fibonacci series. So 34 angstroms by 21 angstroms possess golden proportions. Even in astronomic examples such as planetary cycles, and we're not talking astrology, we're just talking numbers. Venus takes 225 days to complete a revolution around the sun. As we know, the Earth completes 365 days. 225 by 365 is 0.616, approximately 618. It's close enough. The inverse, same deal. Now, harmonic phenomenon related to the markets is where we really get some serious undiscovered information. But the key is to identify these complex cyclical situations with the phi and phi derived ratios. I'll get into that in a second, but that pinpoints the discernible segments of price action. These levels can define the natural support and resistance, and we can anticipate these levels. Applied to the markets, these measurements consistently define trade opportunities and outline repetitive technical relationships that offer a great deal of information regarding the future price direction. Now, it's important. I want to separate harmonic trading from wave theory because this is not Elliott wave. We look at ratios differently because ratio alignment is essential in harmonic patterns. It's almost has to be exact to be valid. There's different rules of how we handle each structure. And we utilize even the midpoint within the M and W structures as a defining characteristic of whether it's a retracement structure, an extension structure, and where the opportunity can be projected. Also, that ABCD pattern I've been mentioning, that's a minimum component. And we'll get into that in that webinar. But these create strict rules to validate structures as harmonic patterns and improve success rates and optimizes consistency. We cannot change these measures. Unlike wave counts, there are only exact alignments or there's no opportunity. This all leads to one of my most important concepts of measuring the market. Anybody that's new to the market, my number one recommendation is that if you're going to trade a market, you measure its price history. Harmonic trading is about measuring all relevant price possibilities to limit possible outcomes. So this creates a defined trading realm. We measure harmonic patterns. We have an idea of how far they can go. We know what the profit target should be. We understand in advance where our stop loss should be before we even execute the trade. This approach employs harmonic ratios to measure where price action has been and where it can possibly go. Each situation is measured to gauge the readings of the technical condition of the perceived opportunity. And again, all actions are defined in advance. Now, it's important to realize that the harmonic patterns are the technical events. This collection of moves, this defines a situation. This is a specific action within the market, a technical event that we can anticipate. Now, harmonic trading effectively defines these critical action spots within the trend that indicates the future potential direction. But it's important to note that these technical events, these patterns, are temporary technical situations. These require an active approach in most situations to optimize the opportunities. We have to employ a defined skill set of trading plan for management as well as execution, as well as looking at the other characteristics that satisfy the validation for a signal of a valid trade opportunity. We'll look at that in our execution webinar, but important to know that we're bringing together a couple of elements to define high probability opportunities. Applying harmonic trading. Now, it's important to know that harmonic trading works on all time frames in all markets, but we want to stick with those time frames where we have enough time to react, there's enough time for the harmonic pattern itself to materialize and actually capitalize on the opportunity where it's a large enough pattern, for example, to even be traded. Or if we don't look at markets that have the liquidity that we need, we might be able to get into position, but we might not be able to get out at the price we need. Regardless, it's important to recognize the stages of the trading process are the same regardless of time frame. So we're looking at identification, execution, and trade management. Regardless if it's an intraday or a daily time frame, we follow the same process. I recommend that you start with longer term situations and fully comprehend the dynamics of price action from a harmonic trading perspective. Review short-term examples to understand the limits of patterns, and also notice how the profit targets and stop loss determinations help to facilitate trading decisions and how they define the entire opportunity. Introduction of harmonic trading conclusion. Now, we're talking mostly in here of M and W type patterns, and they define high probability opportunities. There are other patterns that are outside of the M and W structures I have not talked about, but we'll cover those. They're namely the shark pattern and the 5-0 pattern, but start with the M and W structures. Understand, learn the harmonic ratios, the structural measures that define these relationships in the M and W patterns. Also understand that we have to define all aspects, the entry, the profit target, the stop loss. These are calculated in advance. And when you get into the pattern webinars, you'll understand how to measure each of these price points. Now, standard technical measures such as relative strength index confirm these structural opportunities effectively. We'll look at that in the execution and trade management webinars, but important to understand that harmonic patterns, that's a starting point for the opportunity. The harmonic trading approach defines the relative nature of any possibility within any price move. So what we're dealing with is natural price action. If we can properly identify it, there's no amount of news, nothing that's going to affect what that natural cyclical signal is telling you. Harmonic trading properly measures, identifies, and illustrates these structural signals automatically. We have software that can do it automatically. I recommend that traders learn the basics first, learn patterns by hand, follow along with the software that I have that properly measures and automatically measures patterns as opportunities, but then integrate and learn the other strategies to facilitate execution and trade management to fully capitalize on what harmonic trading can provide.